Assalamu alaikum, my name is Rakan Kayali and welcome to Practical Islamic Finance. Today we're going to talk about Zoom Video Communications, ticker symbol ZM. We're going to try and figure out whether it's a good investment still or if it's become too pricey. So without further ado, let's get started. I expect many of the viewers are familiar with what Zoom does. It primarily provides a simple to use video conferencing service that can be used for online video chats with your coworkers or for distance learning or just for social meetups. Basically, it's used for what we used to use Skype for. Perhaps a good topic for a business school case study would be how Skype got absolutely pulverized by Zoom in such a short period of time. Basically, in just the past 12 months, the world has transitioned from using the word Skype as a verb to indicate teleconferencing with someone to using the word Zoom instead. Now, after dethroning Skype from rule over the world of video conferencing, Zoom has benefited immensely from the recent pandemic, since its service has transitioned from being just a nice to have to being an absolute necessity for many organizations. As a result of this, Zoom's stock price has zoomed upward, pun very much intended here, during the pandemic. In fact, an investment in Zoom would have quadrupled in value just in the past 6 months. Now the question that suggests itself here is it too late to hop on the Zoom gravy train, or is there still a lot of meat left on this bone? At a share price of close to $250 per share, imputing a market cap of $72 billion, Zoom's price to sales ratio is close to 91. It has a forward PE ratio of 204. In comparison, Salesforce, another software as a service provider, has a price to sales ratio of close to 9 and a forward PE of 62. So on the face of it, the valuation for Zoom seems like it's firmly in banana land territory. However, if you remember my video on how to find undervalued stocks, you'll remember that when you're dealing with growth stocks, it is more important to look at something called the PEG ratio that takes into account the growth prospects of the company. And the smaller the PEG ratio, the more attractive the company is. In the case of Yahoo Finance's PEG ratio, they look at the forecast for growth over the next 5 years. The PEG ratio for Zoom is 3.46, which is comparable to the PEG ratio of Salesforce, which is at around 3.12. So the PEG ratios of Zoom and Salesforce are rather similar. So the valuation of Zoom may not be in banana land proper. It may be just on the border talking with banana land custom officials. Having said this, I'm not against paying a pretty penny for a good business that is churning out profits and has a great gross profit margin like Zoom does and has a lot of room for growth. However, here is why I am somewhat reluctant to invest in Zoom. I have been and I continue to be. In one short sentence, video conferencing is becoming a commodity. A lot of people are doing it. Facebook is doing it, Google is doing it, Cisco is doing it, and a lot of others are doing it as well. There isn't really any proprietary technology or technological advantage that Zoom has compared to its competitors. What Zoom has done exceptionally well is execution. It has a really simple, easy to use user interface with some pretty cool features like changing the background behind you to be the solar system, for example. And I like their product. But the question in my mind is, how do you protect this business? What is the moat that is around Zoom? I opened a Zoom account and I was literally using the tool within 2 minutes. Similarly, I've opened accounts with other services and used them just as fast. Managing my investment firm, BFF, I am constantly talking with investors and funding customers using video chat. I've had customers that didn't have Zoom and we've used Cisco instead. I've had other customers that didn't have Zoom and we've used Google Hangouts instead. And to be honest, yes, I may have a small preference for Zoom, but it's not a big enough preference that I would push back on someone suggesting we use a different service. Probably the only video conferencing service I wouldn't use would be Facebook's video conferencing service because I don't trust them as far as I can throw them. Anyway, it's just a few clicks that you're actually interacting with the tool, and then once you got the video going, you basically forget which tool you're using. Unlike Slack, wherein if I had someone in BFF tell me, I don't want to use Slack, let me use some other messaging board, then I would probably have some pushback and want to evaluate that other messaging board. And there would be a lot of inertia before I decided to move to a different messaging service. But with Zoom, I really don't have any strong preference for Zoom or Google or Cisco or any other alternatives. So unless I start sensing for myself first a strong preference for Zoom that would prevent me from using other services, or Zoom convinces me that it has some sort of proprietary technology that isn't replicable, or some technological advantage that is very hard to catch up to, I really wouldn't feel comfortable paying a valuation for Zoom that assumes extremely high growth for years to come. It seems to me rather plausible that just as Skype was replaced rather quickly, so could Zoom. And this is really what causes my hesitation for investing in Zoom at this point. It's not so much the valuation, which I agree is rich. However, as I mentioned, I will pay for a company, a good company that is profitable like Zoom, even if it has a rich valuation, if I think that it has a moat around its business that it can use to fend off competitors and maintain a competitive advantage for some time to come. And I just don't see this as of yet for Zoom. Besides coming up with some proprietary technology or some lasting advantage over its competitors, if Zoom starts to create a ecosystem around its video conferencing tool that makes it indispensable or very hard to switch from after you've used it, then I may reconsider my analysis. But for now, I simply see that there are more compelling investment opportunities on the market today. As for Zoom's halalness rating, obviously the business that it's in is not haram, and it has very limited dealings with interest given its size. So I would actually give it a halalness rating of 9.5 out of 10. So I have no qualms with investing in Zoom from a halalness standpoint. So that was my analysis on Zoom stock. Make sure you do your own due diligence before you make any investment decisions. Don't invest any money that you can't afford to lose. If you're looking for a place to buy stocks, I'd recommend trying out M1 Finance. It's a completely free service, and if you'd like to do so while supporting the channel, please use the link in the description below. If you earn more than $200,000 annually and you'd like to invest some money with me in a unique asset class that you really can't get access to anywhere else, then check out the link in the description below, or just go to fundmebff.com and apply to become an investor. Until next time, make sure to take care of yourself. Assalamu alaikum and peace be upon you all.